Hello everyone, my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter. Thank you for joining us today as we're looking at the fundamentals of driving the markets currently. So Peter, a new day, a new week. How are the markets today?
Well, we had the US dollar, which tended to remain at rather high levels. It's characteristic that the USD index remained at a 20-year high. I would add to note that more or less the anticipation of the Fed's interest rate decision on Wednesday seems to be keeping the bidding for the US dollar afloat. On the other hand, we had gold's price, which seemed to be weakening somewhat, given that it's already ended the week on Friday in the reds, and it has been dropping for the past 5.5 months. Across the Atlantic, we have in the UK the funeral of Queen Elizabeth II, so it's still a mourning period and a public holiday for the UK. Albeit the pound is not doing so well. Actually, the pound has reached, if I'm correct, a 37-year low against the US dollar. The outlook of the UK economy is rather grim, so we would expect the bearish sentiment to be maintained. At the same time, in the euro area, the outlook is also pretty grim, but the euro seems to be holding on and has remained rather stable against the US dollar. Other than that, I would expect more or less the markets to reopen, possibly given the expectations for the Fed's interest rate decision to remain or to maintain the US dollar at rather high levels.
And what's on the calendar for today?
It's an easy Monday, not much. We would expect more or less fundamentals to keep the markets on the go. Other than that, I would be highlighting on Tuesday's Asian session the release of RBA's September meeting minutes. Mind you that we had on Friday some comments which were made by RBA Governor Lowe, where he stated practically that as time progresses and the bank proceeds with more rate hikes, we should expect the size of those rate hikes to slowly start diminishing, which on the one hand, implies that there will be more rate hikes to come. On the other hand, though, tends to imply that the size is going to be slowly shrinking, and that could more or less weaken the Aussie somewhat.
And how about the rest of the week?
We have a rather busy week ahead. As for financial releases, I would be highlighting 3. The first would be Japan's CPI rates. They are due out tomorrow during the Asian session. A possible acceleration could more or less provide further support for JPY, as practically the pressure on BOJ to deliver a rate hike on Thursday, albeit not the case, but nevertheless the pressure would be increasing. I would also be highlighting on Tuesday the release of Canada's CPI rates. Once again, a possible acceleration could provide some support for the CAD. And I think the crown of financial releases is going to be on Friday when we get the preliminary PMI figures. It's for Australia. I would be highlighting from the Eurozone, France, Germany, and the Eurozone as a whole. I would also be highlighting UK and the US. Now, should they show, especially about the Eurozone, a contraction or even a slowdown of the expansion of economic activity in the Eurozone, that would more or less be leading towards a bearish sentiment for the common currency, as the possibility of a recession would be nearing. On the monetary front, tomorrow we have Riksbank's interest rate decision. On Wednesday, the key event of the week would be practically the Fed's interest rate decision. Now, the bank is widely expected to hike rates by 75 basis points, but we have to note here that a number of market participants is also expecting the possibility of a 100 basis points rate hike. In both cases, the bank is expected to remain hawkish, and that's being based practically on the employment data which were released at the last NFP report, but also, and probably for mostly, on the CPI report which was released for August, which showed that inflationary pressures within the US economy remain strong, and the bank has to act decisively. On Thursday, we would be beginning the day with BOJ's interest rate decision. The bank is expected to remain on hold, probably will be maintaining a dovish tone, which could weaken JPY further. Mind you that USD JPY is already at very, very high levels, and the possibility of a market intervention cannot be excluded. But given BOJ's dovish tone, we may see that even a possible market intervention by Bank of Japan or the Japanese government may produce little results. We continue the day with Norges Bank interest rate decision. The bank is expected to remain on hold, nothing much there. I would be noting from Turkey CBT's interest rate decision, the bank in its last meeting had decided to cut rates, the 1 week repo rate to 13, from 14 to 13%. Mind you that in Turkey, inflation is above 80%. So that's a big issue. Should the bank proceed with another rate cut, we may see the lira tumbling. And that's a big issue. Also on Thursday, I would be noting BOE's interest rate decision, which was actually scheduled for last week, but with Queen Elizabeth's passing, it was postponed for 1 week. We expect the bank to hike rates by 50 basis points. And I would also expect BOE to maintain a rather hawkish tone, which more or less could provide some support for the pound. Albeit I have to mention here that a 50 basis points rate hike may disappoint pound traders, and that could be weakening somewhat the pound. That should be it.
Any final comments, Peter?
Well, as the week reopens, we have mentioned before that we would expect the bidding for the US dollar to remain high in anticipation practically of the Fed's interest rate decision. On second note, we may see the bearish tendencies for gold being maintained, given also that we have rising bond yields in the US, and given the negative correlation of gold to bond yields to bonds, we may see the precious metals suffering somewhat. Also, US stock markets may be somewhat muted, if not even bearish, as the tightening of the Fed's monetary policy may more or less drain the market out of liquidity.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Yosif.
Welcome to the technical analysis part of the presentation for today. In front of the screens we have the US dollar index, the 4 chart. Note that all charts we presented are to be of the same time frame unless otherwise stated. So we have, let's mark this first. It's going to be US dollar index. So we have the US dollar index, which seems to be slightly rising during today's late Asian and early European sessions. However, overall, of the index tends to be sideways, and that does not seem to alter. Practically, the price action of the USD index seems to be revolving around the 109.90 level. It's very characteristic how the level cuts through the price action. We can maintain a bias for a sideways motion for the pair, sorry, for the index, and we highlight how practically see how the Bollinger Bands have narrowed, implying the slowdown of volatility for the index. At the same time, note please that the 20 moving average had a clear upward momentum after bouncing on the 100 moving average with a beautiful rise. Yet, practically since late Friday, it has started to stabilize. And that tends to imply practically a stabilization of the price action around these levels. The continuation. Practically the technicals, or the chart of the US index, seems to be reflecting a wait and see position on behalf of the market. On the flip side, I would be also noting the RSI indicator. The RSI indicator, which was aiming for a reading of 50, bounced, rose, and is currently at 59.38, that's 60 practically. More or less implying that there may be some bullish tendency for the pair. So once again, we maintain a bias with sideways motion. We definitely have a wide spectrum between the R1 and the S2, 110.75 and the 109 support line, with the 109.90 being the midpoint between the two levels and the price action revolving around it. Note how the 110.75 practically stopped the index's ascent. It was like here, with a beautiful upward trend line, which was folded at the R1. So we simply maintain it. You see it as pretty valid. On the other hand, the 109 had some substantial stops here, and to the upside here, here. So that's also being highlighted. While the 109.90 shows its validity from here, 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 and here. Now, should the bulls maintain control, say for example the rise be extended or the buying interest being extended, we may see the price action rising, breaking the 110.75, which provided resistance here, as I mentioned, and start aiming for the 111.65. To the downside, should the bear stick over, I would require for a bearish outlook A, a breaking of the S1, B, a breaking of the S2, and the price action to move decisively lower towards the 107.65 support barrier, which more or less note how it was just a downward movement for a number of days for the index on the, let's have a look, on the 15th of September. It was practically the day where the release of the UCTR rates for August was released, and with the jump in the dollar index had in the following hours. It's a beautiful reaction. It was the widest in a while. Okay, let's have a look now at USD. USD would also tend to maintain a sideways motion. Let me just adjust the level. Also, let's add label. Yeah. So for the time being, we tend to maintain a bias for So sideways motion to continue. I wouldn't be surprised to see the price action easy the R1 parallel level. That would be see at 1. Yet for time being seems that the main body of the price action remains slightly below it. Overall, the relative stabilization of the pair as in the US dollar index was also characterized by the narrowing of the volatile band, the upper volatile band and the lower volatile band, while the RSI indicator seems to remain slightly below the reading of 50. Actually, it's at 44, more or less in time some very, very slight variation for the pair. Yet in our opinion, the sideways movement seems to be continuing. Now, for a bullish outlook, we would expect the price action of EURUSD to would require the price action of EURUSD to break above parallel level and definitely also above the 1.0095 resistance line. On the other hand, for a bearish outlook, I would require clear breaking of the S1, which provides us successfully here and there. That would be the S1 0.99 support line. We start aiming for 0.98 possibly. Mind you that the pair's price action seems to imply that the pair remains USD driven, while the euro may have already traders which have already digested to a wide extent the possibility of a recession coming to Europe. It's a grim economic outlook, which could weigh on the consensus. But once again, for the time being, the pair remains USD driven, so the initiative of the pair's direction relies more on the greenback rather than the common currency. Hence, the market seems to be anticipating once again the release of the Fed's interest rate decision on Wednesday in order to reposition itself once again. And should the US dollar strengthen, we may see bearish tendencies for the euro. We see actually being more intense. Okay, let's have a look now at cable. Cable which has broken the S1 and moved decisively lower. Note that we have one peak, then a lower peak, then another lower peak. So one toe, lower toe, which is about to move even lower. But first things first, so let's correct the resistance support line. And let's set the new ultimate support level, 110. Let's readjust the labels as well. Okay. Ultimate resistance line being placed at 1.1740. Second resistance line being placed at 1.1605. Sorry. First resistance line being placed at 1.1450. First support line now being placed at 1.15. Mind you that the pair has hit the 7-year lows, if I'm correct, which is definitely beyond our price action and the extension of M24. 1.1150, the second support line, and the final support line being set at 1.10. indicators. Also, let's add a little on the top. And that would be the second visibility, visualization, whole process data, really like a full. So, what's the story? Well, the story here with cable is that we expect versions to be maintained. And we intend to maintain a bearish outlook practically in two reasons. The first is that the bear has practically marked lower peak to lower truth. The second reason would be that the RSI indicator below the 4-hour top is running along the region of 30, implying rather bearish sentiment on behalf of the market. Yet, that would also imply that the pair has not reached over those levels. I would expect it, expect the RSI indicator to break below the third level before it reached over those levels. I would like to have a look at the volatile bands as well here. The third indicators, the trend, the volatile bands, 20 moving average, 2 deviations in dark blue. A very, very different picture of what we had from Euro USD. So we see that in contrast to Euro USD, which seems to be stabilizing, cable is still dropping. And that would imply, given the stabilization also of the US dollar index, which we saw before, that more or less the pair is driven mostly by the pound rather than the USD. So the pound as such has bearish tendencies, while a possible strengthening of the US dollar would be enhancing the gap between the two currencies outlook and perhaps could drive cable substantially lower. For the time being, we tend to maintain a bearish outlook, as we have mentioned, in which case we may see the price action dropping. Definitely would require clever to 1.13 or a lower trend than this one for a bearish outlook to be maintained. And should the 1.13 be broken, the next possible target for the bears cable could be the 1.1150. Now, should the pair stabilize, given that it seems to be finding some difficulty in marking a new show, a lower show than the previous one, which was marked on Friday, the 16th. Should a stabilization occur, I would expect it to remain between the 1.1450 and the 1.13 section. So we may see price action rising, dropping, but remaining between the two levels to mention. In case we have an upward momentum and the bullish outlook more or less prevails, that would imply definitely the breaking of the 1.1450 resistance line, which would also be breaking the downward motion and the consecutive lower shows of the cash price action, and for the cash to start aiming for the 1.1605. Mind you that the second resistance line provides us resistance here and support here. So make this be pretty right. Okay, let's move now to USD to Y. USD to Y, which has been moving in sideways motion, possibly driven also by the US dollar rather than the DJY. Such note that it remains faithful, practically respecting the 143.50 resistance line. Let me make some small resistance here. And let's also correctly position of the support line labels. There we are. I would be also adding a little bit here. Using the Y, so it's a layer for the start, which we're talking about and which the chart refers to as practically the labeling test as regular volatility. So for the time being, we tend to maintain a bias to sideways movement continue. And that's practically on three reasons. A, the pair seems to remain in sideways motion since the 15th of the month, or the 14th of the month in the right session. It has stabilized and not only stabilized. Note how the volatility was far wider in the past days, roaming practically between the 145 resistance line and the 141.50. Yet after Thursday, the pair's price action remains in a tight, very tight range-bound movement just below the 143.50 resistance line. That would be one. The second would be practically the narrowing of the Bollinger Band up downwards first. The lower Bollinger Band has moved upwards while the upper Bollinger Band has moved downwards, narrowing the range of the price action. And the third level would be the RSI indicator, which is running along the median of 50, actually revolving around it, also implying rather indecisive market. So all in all, we tend to maintain the bias for a sideways movement for now, which could be maintained between the just below the 143.50 resistance line. On the other hand, should the US dollar find additional bids in its path, we may see the price action rising, breaking the 143.50. Yes, mind you, for a bullish outlook, I would require also breaking the 145.10, which was aimed for tested once right here. So I would expect the price action in the bullish outlook to rise, break the 143.50, break the 145.10 in April, meaning practically the pair to mark a higher peak above the previous one and start aiming for the 144.50. For a bearish outlook, we may require the pair to reverse direction, drop, break the 141.50, set the pair in for here, and start aiming for 139.5. Okay, let's have a look also now at the other commodity currency pair. That would be USD CHF. Let's label this. And let's have a look how the price action has been moving. Upward movement is clear. And that would practically reverse the role of the 0.9610 support line into resistance line into support line, sorry. That would also be something to a new resistance line, which cannot be anything except here. Maybe a little bit lower, multiple touches, Here at the level that would be the 99.50. Sorry, that's 0.9860. Let's cut the labels, making it start with the support lines, 19.5, with the support line. Second support line being now placed at 0.9480. Third support line now being placed at 0.9610. First resistance line being placed at 0.97. Second support resistance line being placed at 0.9765. And final resistance line being placed at 0.9860. Now there's an upward movement despite some stalling here. The correction lower. I'm still seeing the upward trend line here. Watch this. Left. That's it, which is very characteristic how it's been guiding it practically since first if I'm correctly have a look. Yeah, since the 15th of the month. It has a nice upward motion, even though it's a correction here. It would be interesting. And it would be more interesting or more easy to understand if we drill down to a 1 hour chart. Let's have a look at that. You can see how the price action is following practically, especially here from here on. The upward trend line we have shown. Note how the price action has drafted higher peaks and higher slopes. Pretty top. Drilling back to the forward chart, we tend to maintain our bias for bullish movement of the pair in the coming days, which may more or less drive the CCHF higher, breaking the 0.97 resistance line, and allow it to pave the way for 0.9765 resistance level. On the other hand, possible stabilization could occur given that the price action has hit the upper volatile band right here, in which case we may see the rise of the pair slowing down, and if the volatile bands are strong enough, note the conjunction of moving averages. This little price action that would be the 20 moving average in blue, the 100 in green, and the 200 moving average in orange. So a stabilization of the pair could imply or could be more evident between the 0.97 and the 0.96 in this zone. Yet for the time being, we also note that the volatile bands have an upward slope, and also note the upward slope of the RSI indicator, which since last Tuesday has risen, has broken the reading of 50 despite the indication here, and is continuing on the rise, possibly aiming for a reading of 70, yet that should take another 2 days. On the other hand, a possible bearish outlook could occur. For that, we would require definitely 12 A, the price action to break the upward trend line. That would be the first signal of the change in the trend in the market strategy. The second signal for a bearish outlook would be a breaking of the S1 0.9610. So I would expect the price action to drop, break the upward trend line, break the 0.9610, and actually start aiming for 0.9480. Definitely it's a little bit too far reach to reach it. So I would be satisfied even with a clear break of the 0.9610 and the price action to start aiming to 0.9480. Okay, let's have a look now at commodity currencies. We're making a start with the Aussie, AUD, dropping once again, breaking the 0.67 support line. If the tap case breaks below it and marks a lower throw, while it has formed a higher peak here, so we may be seeing some kind of stabilization. On the other hand, though, the price action, sorry, the RSI indicator is quite below the region of 50, it's actually 37, which may be implying a bearish sentiment for the share, and that could be driving it lower. Yet I would like to see the price action performing, or at least creating a new lower throw, lower than the previous one. The fact that we would have to test the 0.6645. But before anything else, let's correct the levels by reversing the rule of the S1 to the new R1. And let's go hunting for a new ultimate resistance support line. Moving further, 9 December, October, September, August last year, July, June. Oh, we have to go even lower. Usually. So the next level would be back in 2003. So we're talking about 19-year low over there. We'll be keeping it somewhere here. Here. However, the validity is definitely questionable, because if we're talking about 19 years back, it's very questionable if it will actually still continue to be valuable for that. And that is the minimum, the 0.6525. Let's go back to the 4-hour chart. We adjust the lead, the top. Let's drop the lead as well. Settings, widen a little bit. So let's put the labels. Starting with the ultimate resistance line, which is now being placed at 0.6835. Second resistance line being placed at 0.6770. First resistance line, which is actually also the level at which the price action is revolving around, would be 0.67. Third support line being placed at 0.6645. 75, 85, into the second support line and the 0.65, 75, the ultimate support line in our top. Once again, I highlight that the validity of the S1, S2, S3 is quite questionable, given that the price action is moving now in a territory of 19 years low. So that's a big issue. On the one hand, we have a downward motion, which could be characterized practically by a downward trend line. Something like this. And on the other hand, though, you see that the price action seems to be stabilizing and moving around the region of 0.67. For the time being, I tend to maintain a bearish outlook. I would expect the price action to drop lower, break, test the 0.6645 support line here. I would definitely require a clear lower show of the price action of AUD before maintaining our bearish outlook. On the other hand, though, the stabilization seems also to be occurring. Yet, note how the Bollinger Bands have a clear downward slope and the rise of the lower Bollinger Band has been reversed to the downside. At the same time, the RSI indicator, we have mentioned this, is already at 37, also implying a rather bearish sentiment for the pair. So for the time being, it seems that the bears are still reigning over AUD/USD, which could drive them to test initially the 0.6645 and then break it and pave the way practically for 0.6585. On the other hand, should a stabilization occur, we may see the price action continuing to revolve around the 0.67, which would ultimately break the downward trend line we have just shown, yet remain near the R1 level, which is going to be flipping rows from support to resistance. In that case, we may see practically a new support line being formed here, where the price action pattern is, that will be the 0.6675 chart. On the other hand, a bullish outlook could also occur, yet for such an outlook, we would require a clear breaking of the 0.67, a breaking of the mentioned downward trend line, and I would also require a clear breaking of the 0.6770, the price action to start aiming for 0.6835. So it would be something like going, reversing, breaking the R1, breaking the down trend line, rising, breaking the 0.6770, thus opening the way for the outflow. I would like to see practically the price action of AUD/USD marking a higher peak than this one, which was set at 0.6770. Some of you may also argue that even this one would be enough. Yes and no. I'm a little bit more demanding on this one. Let's set the label for the top to be marked, so you can see black 32. Okay, that's it. Once again, bearish outlook being maintained due to the down trend line, yet note that there may be some kinds of stabilization around the 0.67. Let's have a look at the other commodity currency pair, that is USD CAD. USD CAD, which has clear upward movement and maybe even the risk of having reached overbought levels. Whoa. Now we have to go heavy for the resistance line, given that the 1.225 is now switching its role from a resistance line to support line. Drill down to the daily chart. Could go as wide as here, but in my opinion, we could try this level. It has more touches. Yeah, this one. I know it's a little bit too high, but now we have to catch the sideways movement which was present for the pair from around the 11th of June up until the 15th of July. You can understand it was 2 years ago. And that would be somewhere. Yep, this structure. It's pretty easy. That would be the 1.3650 in red piece. Okay, let's do it up. This one. Tap. Goes down to the 4 on top once again. Put the labels. So we see that USD CAD has been on the rise. Now, given that the US dollar index has remained rather stable, that could imply practically that we have a weakening of the Canadian dollar. Mind you that tomorrow we're going to be getting the Canadian inflation metric. It will be August. Possible acceleration of inflation in the Canadian economy could increase substantially the pressure on DOC to act in order to agree Chinese monetary policy. That could be providing some support for the Canadian dollar, which more or less in such a case could drive the pair lower. Final support line now being placed at 1.2985. Could go up to 1.2950. Let's have a look. So we maintain a bullish outlook for the USD index, or the USD CAD, and as long as the price action remains above the upward trend line, we tend to maintain that outlook intact. In such a case, we may see the price action rising breaking the 1.3250 and start actively aiming for the 1.3490. There is a catch here. The catch is that the RSI indicator has surpassed the reading of 90, so it's just 70. So that could imply that the pair has reached oversold levels and may correct lower. In which case, we may see a stabilization occur. Such a stabilization could be signaled if the price action, on the one hand, breaks the aforementioned upward trend line, yet remains and respects the 1.3350 and the 1.3205. Some could argue also a slight rise and stabilization with the price action revolving around the 1.3350. I would accept that also. But the main element would be the breaking of the upward trend line. That's the first sign of a changing trend. On the other hand, should the pair stabilize and the bears find a chance to take over, I would expect the price action to break the aforementioned upward trend line, yet also break the 1.3205 and the pair to start aiming for the 1.37. That should sum it up for more of us here at IronFX. Best wishes for solid trading.
Hello, my name is Christina, and today we will talk about MACD. Moving Average Convergent Divergence was invented in 1979 by Gerard Apple. MACD is one of the most popular technical indicators in trading. Basically, MACD is a trend following momentum indicator that shows the relationship between two moving average of a security's price. The indicator calculates the difference between an instrument's 26-day and 12-day exponential moving averages, EMA. The 12-day EMA is faster than the 26-day EMA. Both moving averages use the closing prices of the specific period being measured. The MACD generates a bullish signal when it moves above its own 9-day EMA, and it sends a sell sign when it moves below its 9-day EMA. Using the MACD, traders can identify points in the price chart where the trend might be accelerating when the two lines cross. A lot of traders use this for an entry signal. Traders use the MACD to identify when bullish or bearish momentum is high in order to identify entry and exit points for trades. Thank you for watching.
Okay, for that, we have another series because there are different ways of entering a position depending on what strategies you are using, right? So that will be covered in another series. So maybe let me share with you guys where you can watch. Let me just take a look. Let me just bring you guys real quick to our IronFX page. Okay. So on the IronFX page, later I'll copy a link and send it to you guys. Okay. Give me 1 second while I pull up the. Okay. So on the IronFX page, just under the webinars, right? You can see all our different webinar. This is what we are touching on today, right? So this is the live session that I'm hosting now. So moving forward, if you're interested, you can actually sign up and register. For example, on September 15, which is tomorrow, there will be a live trading session hosted by Jin. So you can register if you want to know how he enter a trade and exit a trade, right, Jamal? Okay, so on this page, not only can you see what's upcoming, you can also look at our previous session, recorded session, past webinars. I'll copy the link and paste it here for your convenience. So these are the past webinars that we have. For English, you just click on the English, and these are the past series that we have recorded, right? If you missed any of this, feel free to come here and check it out, because these are very useful sessions that might be able to help you understand the basic and the fundamentals of FX beginner trading. Okay, so other than that, I also want to direct you guys to our VIP room as well. So recently, the Forex Army, or the Everest Fortune Group, which is our company, have a special and exclusive partnership with IronFX, where we have a special VIP trading room, which is this. Okay, so long as you have a account with IronFX, you can get access to this depending on how much deposit you have in the account. So in this VIP trading room, you get exclusive market forecast, because daily we will have daily forecast, daily market updates, daily news, fundamental news that is pasted there for you guys to take a look. Okay, ask our experts, myself, Desmond, as well as all our other prop traders and analysts will be there to answer your questions. So if you have any questions, feel free to ask on the VIP room. Okay, or you can also request for market forecast as well. So for example, you can say, hey Desmond, could I get what's your take on yen, USD yen, or Euro USD, right? So it's a tailored service that we have that caters to what you need. So there are 5 tailored account types depending on how much you have deposited, right? So deposit 250, 1,000, and it caters to different assets on that page. Okay. So let me bring you guys there to take a look at how the service is like. Just a brief introduction to the VIP room itself. Morning, Francisco. Welcome to the webinar. Okay, so this is how the platform itself looks like, right? Depending on what is your account size, and then it will cater to different needs of your trading needs. So there is a section where you can come in here and chit chat. You can ask us questions, ask us about what take we have on different currency pairs. Potential setup is where us, the analyst, for example, Desmond, he will come here to actually place his take if he has a setup that he is potentially looking at himself. So he'll come here, he'll post, any of us can post here. So this is our take on potential setups. And for news-wise, daily, we will update on fundamental news or what is important. So for example, yesterday, right, there is the USD CPI news that came up. So what we expect will happen in the next couple of hours or the next day will be written here for your viewing or for your analysis, right, to help you, to assist you. Okay, so Euro news, USD news, gold, oil. If there is anything that you don't see here, you can let us know as well. Okay, then we have our major pairs, the DXY, the USD pairs, etc. Commodities, indices, crypto, everything, any currency that you are looking for, just let us know if it's not here. So how is this a tailored service? So for example, this morning or rather, maybe let's take a look at BTC. Okay, so today, one of our prop trader, I think it's just quite recently, about 3 o'clock, right? SGT, Singapore time, 3 o'clock. So our prop trader Chen, he came in. He actually plotted some of his analysis. So how this work is, for example, you have some questions for us. You can say, hey Anna, I'm looking at a key level here. You know, we can highlight the level. Okay, let me just put it here. I can highlight the level and click it to exactly where it is, right? So even if I delete it away, when you hover around the highlighted words, your lines will still be there. So it's very clear exactly where we are talking about, okay? So we'll come into the chat, we'll highlight important areas for you to look out, what are the key levels, etc. Okay, so this is the basis of IronFX VIP portal. So feel free to check it out. Let us know if you have any questions, right? Okay. Okay, so let's begin today's webinar series on trade management, part 2 of 4, break even and partial profit placement. So how many of you guys have actually tried or know how to put your break even and take partial profit? Do you guys use that often, or is that something that you haven't thought about, haven't seen? Let me know if you have any questions or any comments, because I have another page that is open so I can see exactly what you guys are typing, or yeah, I can see any questions that you have. So feel free to type there and I'll answer whenever I can. Right, okay, I have some answers that says that you do not know how to use break even, or you do not take partial profit. Okay, this is a very important risk management. We can say it's risk managing as well. Okay, part of your trade management tool as well, because it's important to know where your break-even point is. Okay, partial profit placement is important as well, because you know you don't want to go through a turmoil. Imagine you are trading on a 4-hour or daily chart, right? There will always be this emotional turmoil that you go through, not knowing where your position is, you know. So placing partial profit or taking partial profit is good sometimes. Okay, so before I start the session, disclaimer again, the information in this webinar should not be considered investment advice or an investment recommendation, but instead can only be taken as educational materials only. So if you were to trade, please do your own due diligence. Okay, so this is me, your host today. I'm Annabelle. So I'm an analyst here at Everest Fortune Group, which is an award-winning research firm, finalist for Best FX Research 2019, 2020, 2021, and finalist for Best Equity Research 2020, 2021. Okay, so I'll be bringing you guys through today's session on trade management part 2 of 4. For those who missed the part 1 of 4, you can actually go to IronFX page to check it out. So part 1 of 4, which I will touch a bit on in this session, which is the take profit and stop loss placement recap. Right. Let me grab my pen. Can I? Oops. Give me 1 second. Do I have a? Yeah, okay. Okay, I'll use blue then. Okay, so agenda for today, I'll start off with anatomy of trade for those who missed my previous session. So anatomy of trade meaning it's not just only your entry and your take profit, right? In between, before your entry, in between, during your trade, and as well as before your take profit, there is a lot of other steps that are essential and as important as your entry itself, because most of us would only focus on the entry part, right? You'll spend a lot of time, you analyze the charts to find the best entry, but we always miss out the in-betweens, which are as important. Okay, so that will be covered in anatomy of trade. Then we will have the recap on take profit stop loss placement. This is in the previous session, part 1 of 4 in the trade management, which is as important. Then we'll have the break-even definition. Oh, this should be, yeah, correct. Break-even placement, break-even definition, break-even placement, partial profit placement. So this series is relatively easy to understand. I'll put it as simple and as understandable as possible. Okay. Yep. Let's move on to the next session, the next page. Oops. Oh no. Okay. So anatomy of trade, like I've mentioned before, right? The anatomy of trade. I'm just grabbing my pen. Just give me 1 second. Okay, so for the anatomy of trade, do I have my pen? Okay, this is irritating me. Okay, I'll just use this pen. Okay. Okay, so most of us, we are always very fixated, very focused, very we put a lot of focus here on the entry because we are always looking for the best entry, right? Looking for breakouts, looking for reversals, depending on what's your style of trading. But we are always focusing a lot, like probably, I would say 60% of our efforts doing this first. Okay, Let me know in the comment section if I'm correct, whether you guys also focus a lot on the entry part. I'm pretty sure most of us focus a lot on the entry part to catch the entry first, and then we will do our risk to reward after, correct? Or we will only think about our stop loss and take profit after. These are often afterthoughts. Or personally for myself and our few of our other colleagues as well, right? These are often afterthoughts, okay? So what we mean by anatomy of trade is that all of these are as important as your entry itself. You shouldn't be just focusing all on entry, okay? There is your stop loss, your take profit placements. These are definite. You have to have it. Break even partial profit is good to know, but I would say it's not as important as your stop loss and take profit. Okay, this is just a gauge, you know, at the back of your head to know, hey, you know, am I at my break even? Am I losing money? Okay, this is a good to know. It's a good knowledge. And then partial profit is a management style where for people who do not want to go through the emotion, you know, especially with very liquid markets, you know, and very volatile markets where your movements can be extremely volatile itself. So if you do not want to go through this kind of turmoil, you can learn how to take partial profit as well as trailing stop. Trailing profits, trailing stop, okay? And then the last part will be idea invalidation. Okay, so this is part 1 of 4. This will be part 2 of 4, and then 3 and part 4 of 4. Okay, this will be covered in the rest of this session moving forward. Okay. Okay, let me move on. So let me do a brief recap on what is take profit, stop loss. Okay, let me look at the comments. Sometimes my entry point. Right. Okay. Okay, so take profit and stop loss. Do you guys remember how you should be putting your take profit and stop loss? Maybe I will divert the attention here instead. Okay, I will just go to a random chart. Okay, so if you guys remember my previous webinar series, maybe I use euro, okay, because I saw one that was quite nice. One will be a good example. Okay, maybe this one. This is good as well. Okay, so for example, if you have an entry right here, you feel like it will move. Okay, this is a recap, yeah. So if I have a entry here, you feel like, hey, you know, my trend is in a very bullish manner. I will look to do a buy position here. Okay, I have a buy here, and I feel like it will go up. Where should your take profit be? Should it be at A? Should it be at, okay, this is a bit messy, 1 second. Should it be at B? Or should it be maybe C? Okay, maybe here, C. A, B, or C? Where should your take profit be? Let me know in the comment section. Where should your take profit be? If you guys have tuned in, please let me know that you have absorbed what I've mentioned previously. Where should you put your take profit? Is it A, at the previous high, C, beyond, because it might potentially shoot up, or B, before the previous high. Okay, I have very good answers. All answer B. B is correct. Okay. The reason why we always put at B is take profit before your magnetic or resistance level. Okay, so this level here, let me just erase. So this level here, it will be a fight zone, okay, given that it connects back all the way as well here. So this is a key resistance area that we will want to avoid because a lot of fightings or a lot of commotions will be happening here. So you do not want to come to this level and go through the emotional ride, okay? So always take profit slightly before your resistance or magnetic zones. Okay, so B is the correct answer. It's very good. Let's play forward. No doubt sometimes it will touch exactly at the peak or at the very prime area, but it's preferable to take slightly before because you do not want this to happen. Imagine you are very profitable right here, right? You have a 90%. Let me erase all the drawings. Okay. So imagine you have a 90%. Your entry is here. Your buy entry is here. And then you put your take profit here exactly at the peak. This is where it happens. So imagine if just because you want to have the full 100% of take profit, when the price came here, you ignore and it fell all the way back down to your, probably your stop loss is here. Okay, you do not want this to happen. So always take profit slightly before. Okay. Okay. So like I've said, like I've mentioned, you always want to take profit before. Oh dear. Okay, you want to take profit before, slightly above, depending on whether you are doing a long or short position, because if you are long, you take before, correct? This is for long positions. You take before the resistance. If you are doing a short position, right, you take above. Okay, for both is considered called before, but it's depending on whether you are looking at the lower section or the upper section. Okay, so always take before for take profit, and then for stop loss, always put beyond because you need that extra buffer. Okay, in case price spikes up and come back down. So you need that extra buffer for stop loss. Okay, so remember, avoid your major resistance area because this is where all the fights will happen. Avoid it. Okay. So what is break even? So for those who do not understand or are new to break even is the point at which your trade neither makes nor loses the money. So basically it's right at where you start. Okay, so for different brokerages, sometimes they might charge you some fees for trading. Imagine you open your position here, entry, for example. Okay, you have to take into account the commission charges or all the extra charges that they have included. So maybe your break even might be slightly above. Okay, so maybe your break even is actually here. Okay, so break even point essentially is right at your entry because there is no you neither make money or lose money at the point. So it's basically you can treat it as your entry point. So that is your break even point. Okay, and the price at which you have entered during the trading position or the level at which the risk on the trade is recovered. So it's dependable on how you view it as, but essentially it's just where you have entered your trade. Okay. Okay, so break even placement. For example, So you have a buy entry here on the breakout, hoping for price to push to our take profit. Okay, so then you have a stop loss line that is here. Okay, break even is triggered here. Right, so break even is a level where you are in profit and recognize that there is a risk of reversal back to your entry. It is basically you saying, if I am right, price should go all the way to my target, but if it goes back to my entry, I'm wrong and I should get out. Okay, so the break even entry is placed here. As you can see, right, it's in the yellow color or the beige color, as you can see here. Okay, this is the break even. Let me indicate it for you guys. Yellow is break even. Okay, and then you have the green, the grayish, which is your buy entry. And then this is your TP and your stop loss. Okay, so you can see here that the person entered a trade here. Okay, the gray is the entry, right? So the price moved up, but when it came back down, I took a break-even position. Okay, before it hit my stop loss. Can you guys see? Maybe it's not it's a bit messy the way they put the wordings, but maybe later I will show you in a live example how break even is placed. Okay, I think there is some slides on it. Let me just move to the next session. Okay, this might be a better example. Sorry, that one is a bit confusing because of the wordings. Okay, so here, this is your entry, right? So for break even point, it will be at the entry, as you can see. Okay, so this is the entry. And then we have our stop loss, which is placed beyond, slightly beyond the swing low. And then we have the take profit. Okay, this is how it's portrayed here. Entry, stop loss. I'm expecting price to go up this way. Okay. Right. Okay, so you can see here, when my price is starting to move up, correct, I can place my partial profit to be here. Instead of having a full take profit, I can take some partial profit here. Okay. Or I can also move my stop loss up to my break-even point. So essentially, if my price reverse, I'm not afraid that I will lose money, correct? Because as humans, we are afraid of losing, correct? Technically. So with this profit, you do not want something like this to happen. For example, if let's say I didn't move my stop loss, right? If I didn't move my stop loss, it will look like this. Imagine price came all the way here, move up, came down, you get a heart attack, people will start to panic, but you feel like it will continue to rise, but it keeps going down to your entry. You will want to fight it back. You wait again and wait, and it hit your stop loss. Okay. Usually some of the times, okay, we might not have the discipline, to do proper risk management or proper stop loss take profit positions. Okay, but having an idea on your break even or partial profit taking is good to have this idea. Okay, to start with these ideas, because maybe sometimes you can actually try to move your stop loss above or take partial profit. Okay, if you haven't done so, this session is to give you that idea. Okay, that partial profit and break-even points actually exist, and it might not be that bad of a risk management tool. Correct? If you try it, maybe it works. No, instead of having to be stopped out, okay, you are at a break-even. Okay, some of us might be greedy, and then we want to trade the work. All of us, when we enter a position, we always want to trade the work, but it's not always the case. Okay, so having the break even tool or knowledge is good, because sometimes you can move it up to your move it up so that you won't lose your winnings, or you won't get tapped out, okay, per se. So if I move my stop loss above, see, if it comes back down, I would not lose any sum of money. Okay, or if I have taken a partial profit there, I would feel better that, hey, luckily I have taken some profits here instead of being so greedy. So it's also dependable on what the market information is telling you, correct? Because sometimes I know we have done a lot of analysis here, blah blah blah. We always think that our trade is always correct, but you have to also take into consideration what the market is telling you. Okay, so when your market is telling you other information, you have to analyze on the spot and make some changes to your take profit, stop loss, break even, and maybe you can take partial profit as well. Okay. Okay, so partial profit placement is exactly this. Let me bring you guys to the charts. Okay, might be easier to understand right here. Okay, if you have any questions, feel free to ask me in the section. I'll try my best to answer. Okay, so for example, let us go to, okay, we'll stick to Euro then. Okay, so for example, if I'm going to take a entry here, maybe here, I will take an entry here. Okay, I'll take an entry right here. Yeah, where the previous swing low is. Can you guys tell me your watch? Oh, okay. Okay, can you guys tell me where would you actually, or where is the break-even point? Is it at A, at B, or at C? Where is the break-even point? Let me move this up. Where's the break-even point? Okay, I have some answers that tell me A. Okay, very good. Yes. So the break-even is always around or at the entry, where your entry is. Okay, so this is the break-even. Okay, I would place my stop loss maybe here. Okay, let me just set up the trade, then I can explain further. So for example, I'm looking for price to do this. Okay. Okay. So for example, change the color to green. Okay, so I am bullish. For example, I'm bullish on my Euro USD. Okay. And then I have my buy entry right here. So when price came here, okay, when price come here, so for example, you have the entry, your entry is here, my entry is right here. For example, when it broke, right? And then I'm looking at this support. So when it broke, probably my entry is here. Okay. Price move up, okay, in my favor. I'm very happy. Then came down, typical move. But when it comes here, most people will panic, right? Because this is the point where you do not know whether you should take profit or not, right? You do not know, hey, should I take profit? Should I close the position? Or should I just hold on and wait for the price to move this way? Okay. So there is a couple of actions that might happen here. One, I take profit. Correct? Right here, I already probably gain a couple of pips. I just want to take my money and go in case the price actually come back and touch my stop loss. Correct? So I could actually take profit. Number two, I can wait or hope that price will come back up and leave everything else as per usual. Right? I will still place my stop loss here. I'll still leave everything as it is. Okay. So what would you do? Will you take the profit and close the position? Or would you wait and hope that, price should go in the direction you have analyzed for so long for this entry? Yeah, most of us would actually wait because we have spent so much time entering and analyzing a trade that we want our trade to be correct. So most of us will wait instead of take profit or close the position. But have you guys ever thought that you can move your stop loss from here to here, so you will not lose any money, or in case price actually flies back down from here to here? Okay, so the two stop losses that I have shown is, one is here, your previous stop loss. This is the second stop loss. Okay, so from here, imagine the price already came here. If you are so afraid that you might lose, or you are, human instincts are naturally, we do not want to lose the money or our idea. So if you do not know how to move it, this is how you actually do it. Okay, so you have a peace of mind, correct? From here, you move to here. So in case you can move up slightly a little bit for those who still want to take that small 1 pip or a 0.5 pip of profit, but usually we'll just put it at the entry level. Okay, so this is one way that you can manage your trade as well. So move your stop loss if you do not want to close the position, correct? Because you don't want to lose your idea. You don't want to lose the idea, or you don't want to lose in monetary sense, correct? So move your stop loss up. Okay, for those who haven't tried or who do not know. Okay. Another way is you can take partial profit as well. Okay, but some people, they do not like to take partial profit. It's all or nothing, right? I mean, it's logical because you have already calculated your risk to reward. You have done all your risk management. You feel like there should not be any partial profits to be taken. I understand that, but there's no harm trying, okay, to take partial profit. So for example, when my price actually came up here from this level, when your price actually moved from here to, okay, usually there will be a take profit. Okay, so for example, if your take profit was to be here, okay, and price, let me adjust. Okay, so price is here now, for example. Okay, I'll just leave it there. Okay, so price is actually moving in favorable, okay, to what you are looking at. Okay. Now, so if you're waiting, okay, for your trade, waiting and waiting, shit. What happens here? It's coming downward, and then you see like, hey, it's telling me that, you know, it might actually reverse from here. You're worried. And you wait again, and there's a big candle that is coming down, and you're worried. And this candle actually shows that, you know, there is a big or a heavy, strong sell pressure. What will you do? Would you wait? Or would you take partial profit? Okay, I have some answers. Okay, I have different answers, both of which are okay because different traders have different ways of trading. So, and you see this, obviously, if it's me, I will panic as well. Okay, so you can actually take partial profit off here, or you could actually move your stop loss even. Yeah, I think you can take partial profit off here. Okay, depending on what the market is actually telling you, right? There is also trailing profits to be taken, but that won't be covered in this series. So we will stick to partial profit first. So you can take off partial profit if you feel like, hey, maybe I should just take the 60% instead of having to lose my 100%, correct? So there are two ways that you can see this. Is number one, you can take the 60%, correct? Or number two, you can just move your stop loss right here. So instead of taking 60%, you want to wait, hit exactly to your 100%, okay, while not hitting your stop loss. Okay, so two ways. You can either take partial profit or you can move your stop loss to the break-even point. So both kind of works the same way, right? It's depending on what trading style you have. Are you the type that you want to take a full profit because you think that your levels are very accurate, right? Because by moving your break even up here, it means that you kind of want to wait for the full 100%, correct, instead of taking a 60%. So it's depending on what idea or what kind of trader you are. You can take partial profit or you can move up your break even point, right, or your stop loss. Okay, you can even move your break even further. Okay, so maybe at this point in time, for example, okay, we will use another chart. If you have any requests, let me know. We can analyze as well. Okay, let's take a look at, okay, this one, it might be, this is a double top. Looks juicy. Okay, let's take a look at this. Okay, for example, so this was a trade that I was looking at, right? There's kind of a squeeze here, which I'm a bit uncertain. So it might just do this, right, before a fly, which I'm hoping for, or it might just pull back down. Depends on whether there are any fundamental news as well. So right here, take profit. Let's do this. Okay, I am looking at a buy here. Buy here. Take profit here. Okay, stop loss here. Now, Yeah, maybe I'll move to 1 hour. Might be longer. Yeah. Okay. Can you guys let me know where would my break-even point be, given this scenario? Where would my break-even point be? Would it be at here, A, B, C? Where would my break-even point be? Okay, remember your break-even point is always, this is C, right? Sorry, I kind of forgot because I didn't indicate. Okay, so usually your break-even point tend to be at your buy entry. Okay. For Emerson, is there a reason why you said slightly above C? Is it why is it slightly above C? Okay, so always remember your break even is always okay. Always remember that your break even point is always around your buy entry or sell entry, correct? Because that is where there is no loss or making of any money. So break even means zero. Okay. So if my buy entry is here, for example, and then price actually came up here. Okay, number one, if you want to do a partial take profit, you can, because you do not want to go through the emotional roller coaster, right? Or you feel like, hey, there is a market news that is coming up. Okay, these are all the small factors that might affect your trade decisions, right? Because right now I feel like, hey, USD yen might actually rise all above to my take profit or even beyond. But there might be news that US have come up with some regulations or whatever that is affecting my yen. That small fundamental news or announcement might actually affect price movements. So always listen and always understand what the market is feeding you. All the information are as important. These are the small factors that might affect you or the price action. So when prices come up here, you can actually take partial profit, or alternatively, you can move your break-even point or your stop loss. Okay, up. Okay, so you can move. So there are a couple of methods. Yeah, yes, it's correct. It's spread, Emerson, correct. So you can actually move your break-even point further up. Okay, so you are still in profit, or you can take a partial profit. Okay, so there are a couple of methods that you can use for people who want to take the full profit, who wants to take the full PP, the 100%. Yes, you can actually bring your break-even point up or move your stop loss up. Okay, for those who do still want to take some profits home, do not be afraid or do not be embarrassed to do so, because it's all depending on your trading style or trading methods. So taking profit is extremely good as well. Okay, so imagine your prices came all the way here, taking a 60% is also good. Okay. Okay. So let me know if you have any requests or any question. Hi Gwen. Hi Gwyn. Okay, you're quite late to the session. if you have missed the front portion of today's webinar on trade management, feel free to log on to our IronFX page and download the recorded webinar series to watch, right? Okay, because we are almost coming to the end of the session. Okay, so let me know if you have any requests before I end today's session. It's a relatively short and easy topic to understand, right? So it's just about the anatomy of trade, how you can move your break-even points. What is a break-even? Your break-even placement, your partial profit, and your partial profit placement. So these are relatively easy to understand fundamentals, but it's about applying it. You know, you can have this knowledge and idea, but if you want it to be useful, you have to apply it, be it on a demo or on your real life account. You go ahead and try it. It might be useful, right? Especially you're moving your break even points. Okay, because most often humans are greedy and we always want to validate our trades, right? When we enter a trade, we always want our trade to be correct. Okay. Yes, Henny. Yeah, partial profit is better than hitting a stop loss. Definitely. Nobody likes to hit a stop loss. Everybody wants to be correct when you enter a position, right? Thank you, Elvis. Yeah, so when we enter a position, most of the traders, we always want our trade to be correct and validated. We do not want it to be we do not want it to go to our break even, or we do not want to go to stop loss. Okay, this is a mental barrier, I would say, okay, for the break even part, because you always want to be correct. So you do not want to break even, correct? That is logical, but break even is a very useful trading risk management tool itself. Okay, so please try it. Okay, overcome the idea of break even. Okay, break even is not losing. Okay, it's just telling you that, hey, you know, maybe this trade don't work out, but you do not lose anything, instead of being stubborn and having this mental barrier for price to go to your stop loss. You know, so try moving your break even or your stop losses, or try to even take partial profits. Okay, sometimes my R to R is 1-to-1, but when the market moves, you know, the emotions are there, so I will tend to take partial profit, which is not wrong, because if, let's say, I have 10 trades and 8 trades I take partial profit, I'm still very profitable as a trader, right? Given if you have 10 trades and you only take 2 full trades, right, and 8 loss, I think I'm a better trader than you. Okay, so taking partial profit is not wrong. If you have a high win rate or high take partial profit rate, it's still very good. Okay, in the long run, if your R to R is maybe your R to R is 1-to-2, but if you take partial profit at 1:1, it's actually extremely you are extremely good trader. Okay. Okay, so I have come to the end of today's session. I hope I have imparted you some of the knowledge that I have about trade management, taking partial profit and break-even points. Okay, don't hesitate to try it, because once you try it, maybe you will like the method or the strategy itself. Okay. Yep, I will see you in the next session on let me see, what is it? I think it's trade invalidation. Okay, it's about the mental, it's a psychological thing, and we also have our partial stop loss, trailing stop loss, okay, that we're going to talk about in the next part 3 of 4 and 4 of 4 for trade management. Okay, so thank you guys for tuning in. I will see you guys next session. Bye.
everyone, my name is Emily, and in this video you will learn about inflation and why it is important in Forex. To start with, we as consumers buy goods or services every day. The people selling those things to us buy stuff from the manufacturers. Inflation refers to the value of this basket of goods in total. In other words, it represents the overall value of those services or goods that there are in a country's economy. We can also say that inflation represents the average price of change of all the goods that exist in an economy as a whole. The basket mentioned above is converted into an index for all countries and is referred to as Consumer Price Index. For example, let's assume that Japan's inflation rate is currently 3%, which is more than last year's. This means that the average price of goods and services in Japan has been increased by 3% in that specific month compared to last year. This also means that the majority of goods has posted an increase in their price. However, if for instance the price of gold has increased by 10% but all the other goods are stable, again we will have an inflation increase. Very high inflation is generally considered a bad thing because as it increases, the purchasing power of people diminishes. Suppose that you needed $500 for all of your everyday household needs last September. If inflation in September of the current year stands at 10%, this means that you will spend $50 more on an average to purchase the same stuff. So indeed, the purchasing power of people is reduced as more money is needed for the same goods and services, leaving you with less savings. However, a little bit of inflation is in fact good for a country's economy. Deflation or declining prices makes businesses less likely to invest in new facilities and machinery, which might lead to an increase in unemployment. Additionally, some households with increased income may find it simpler to pay off debts as a result of inflation. Although as a customer you might not enjoy it, a moderate price increase is a sign of a strong, expanding economy. Historically speaking, at least, salaries often increase at a similar rate with inflation. We hope you enjoyed this video on inflation. Stay tuned for more. Bye-bye!